Welcome to Venture Out event, taking on AgTech Transfer. Today, we are venturing out with Frontier IP to ask, how can we work to proactively source innovation for spinouts, build an ecosystem of partners, and successfully bring innovations from lab to market? What does technology transfer for the agricultural sciences at CGIAR and beyond have to learn from leaders in the innovation ecosystem? Hello, my name is Megan Steele, bringing you this event on behalf of the Accelerate for Impact platform, a venture space that builds on CGIAR's legacy of research and innovation to co-design, accelerate, and fund science-based innovations to address some of the world's most pressing challenges at the nexus of agriculture, environment, and health. Venture Out aims to showcase success stories of bridging research ideas from lab to market, and in doing so, encourage learning and connection amongst innovators. Through these discussions, we can highlight the synergies and pathways for value creation with CGIAR research, and further inspire the entrepreneurial mindset and market-oriented approach among CGIAR's scientists. Our focus today will emphasize the importance of establishing a strong network of partners to facilitate technology transfer, and we are honored to have with us an example of this kind of collaborative approach to commercial development, Frontier IP. Frontier IP is a specialist in creating and supporting high-growth potential companies from intellectual property generated by universities, academics, and other researchers. Frontier IP establishes deep relationships with institutions and industry to proactively source potential spinouts, provide hands-on commercialization support, tech validation, early industry engagement, and fundraising. And joining us is Crabb, Chief Executive Officer of Frontier IP, an experienced investor and director of a wide range of technology and university spinout companies. Neil will present on the work of Frontier IP, and to follow, we will welcome the Accelerate for Impact platform's Nekesah Wafullah, venture builder expert, for an interactive discussion about technology transfer and innovation ecosystem building across science and venture perspectives. Without further ado, I'll welcome Neil Crabb, CEO of Frontier IP.
Thank you. So shall I just share? I've got some slides to share if that's okay. So I will just use those as a format.
Perfect.
And put those in presentation mode. So hopefully you are now seeing my screen. Is that okay? Excellent. So for those that don't know, first of all, just to give some background on Frontier, and then that will give you some context as to where it fits. So we are entirely focused on building high-value businesses from science and technology. We're quoted on the London Stock Exchange. We have physical offices in Cambridge, London, Edinburgh, and Lisbon. So we operate on originally started operating on a UK basis, but now operate on a pan-European footprint. Our primary focus is on commercializing university-originated IP, where we act as the co-founders of spin-out companies. And we only do that, though, in certain clusters, as we call it, where we see common scalability challenges. So food and agri-tech obviously is one, and that's our present today, but materials, cells and pathogens, the blue economy, AI and robotics, and energy. And if it's outside that area, it's not for us. So we think that focus is really important. All of these area definitions have common scalability challenges. So for example, in materials, whether a particle is a food ingredient, a ceramic, or a pharmaceutical, it still starts typically at batch process in a laboratory, whereas industry wants to see a continuous flow process with known unit costs. So there is some common scalability issue that actually applies irrespective of the end market. And we find that therefore by focusing on these clusters, we build up experience over time about how you go from the early stage academic innovation to finding something that industry can use at scale. We have what we describe as an operating model. So unlike classic venture, we have a high ratio of people to each spin out, typically 1-to-1, although it's actually a collective team that we put on per project. And our team is drawn primarily from an industrial background rather than from finance. And again, in many cases, certainly in the UK, you will find that lots of the people in venture are drawn from finance, and they understand the economics of the situation, but have less experience of how you actually scale the business. In terms of the mix of our own portfolio, we cover a range of companies already that are active in the food and agritech space. So we have one company in alternative proteins, a couple that are getting at one at water quality and another at water testing. We have a crop picking robot company that's doing logistics in the food industry, which has absolutely gained more attention post COVID, and an animal vaccines business. Just to give you an example of some examples of the range of things that we cover. In terms of my own experience, I've been investing for over 25 years, both quoted and unquoted actually, and have founded 2 companies that are floated on the London Stock Exchange. We also do outreach events like this. So I'm a mentor in the Creative Destruction Lab program out of Oxford, which looks at how you enable and help early stage companies to achieve massive potential. And I'm separately an advisor to a Research England fund. So Research England is the body that's providing translational funding to UK universities. So we have some wider strategic overview of the space. So how do we actually how do we actually source innovation ourselves? This was one of the questions we were asked to address. I think from our point of view, the first thing is that focus on clusters and things that we at least think we understand is very helpful, because it means that you're building up networks with repeat connectivity. If we were generalists, it would be very hard to really get engaged and help with scalability. And even within the clusters that I described, we have certain nodes that we focus on where there are particular areas of expertise. So for example, in the materials space, materials is a huge area. One of the areas that we look at is graphene, but even within graphene, we're only interested in the optoelectronic properties of graphene. So it's quite narrow. We have certain areas that we build up domain knowledge. Conversely, there are things that we deliberately don't do. So for example, lots of excitement has gone on around blockchain and where it might apply to helping supply chains in various areas. Fine, it's just not us. We don't deal with that. We don't think we understand the case or have a particular advantage to bring. It doesn't matter actually to us whether we're right or wrong. It's about what we choose to do. If we don't understand something, we just don't do it. Simple as that. We also don't look at direct brand building with going to the consumer directly. We're interested in finding people who already have aggregated that consumer base and can reach them when given enabling technologies. So we're trying to create a leverage effect. If you've got a good innovation in an academic background, it doesn't follow from that you'll necessarily be good at building brand and all the things that need to deliver product at mass market. So we are much more interested in finding the big company that has the access to that end marketplace. We put a lot of premium on interacting early. So we've worked with teams for even a year ahead of incorporation, very often where they may not, for example, understand what the end market or application may be. So we can help them to define that. And in some cases, we'll work on, it turns out through that process that the better route is to go direct to licensing than creating a spin-out. And again, we can help them drive commercial edge to that process. The rationale behind that is, first of all, it's all about people, and this is a good way to get to know the people. But secondly, we are particular fans of experiment and then scale rather than scale and then pivot. So in the age of the unicorn, it's all been about getting as big as quickly as you can. That's not how we think about things. We think about finding out what you don't know, what the solution to it is, and when you've got that solution, then you scale it. And that comes from, therefore, getting the groundwork right at the start so you can engage with the team. We put an emphasis on networking rather than advertising, so you won't find us generally promoting what we do. We're much more interested in events like this where we can come and talk directly to people that are in the space about what we do and explain in some detail what the model is. That's also because in this area, well, generally in the whole commercialization space, when you talk to people about why things fail, they fail because of people. It's not the technology that's the problem. And when you're networking, you get a better qualified stream of ideas and engagements. So you reduce your signal to noise ratio, basically. You get to hear a lot more from projects that might fit. Having said it's about people, we really want to find people we like and that like us. It takes years to get these projects through to full commercialization. And if you don't get on with the people, you just shouldn't do it. And it's the basis for trust anyway in a relationship. And it's certainly the case that you'll hit road bumps that you're not expecting. If you don't start out getting on and have different agendas, then inevitably at some point the commercialization process will find you out on that, and you'll hit difficulties. I think increasingly, during COVID, it was all about Zoom and interaction online, and that was great. But the reality is, as things come back, what we've seen is certainly that interacting on the industrial side, it's much more about getting back with people engagement. And that's come on, I would say, even in the last 3 months or so, that it's back to what it used to be about engaging face-to-face with people and getting out there and interacting. Interestingly, in the Cambridge context, where our main base is, the academics aren't even obligated to work with the tech transfer office if they don't want to. And what that means is you need to reach out and engage with them. Cambridge has a huge scale, and you need to reach out and engage with them. Similarly, in our Iberian business, I'm off shortly to Madrid to go and see a team face-to-face, and you just can't be going around the laboratory, seeing what they're doing, and engaging directly with the technology. You don't get the same input from, frankly, a slide deck and an online presentation. So I think it's important that we get out face-to-face and engage with people fairly early in the process. As I mentioned, schemes like this are very interesting, and if I don't manage to put you off through the course of the presentation, you think we can help, then please do feel free to reach out and see if we can find common agenda. Equally, programs like the Creative Destruction Lab out of, well, it's actually global, but the stream we're involved in runs out of Oxford. So they have a 9-month incubation program where some really, really good fellow mentors get engaged. And we'd like to see what we can learn off them as well about how you do things faster, where you widen the network and such like. We bias towards problems that we've solved before as well. So part of our added value is that we like to see things where we've understood this context as a challenge we faced previously. So I mentioned in the materials space, if you drill down right into the details, something like spray drying, which is a common industrial process, doesn't scale linearly. So what you've got working in the laboratory may not look the same when you scale it up. It uses a lot of energy as well at volume. It constrains your throughput. And by working across multiple industries, we've found solutions, for example, in pharmaceuticals that you can apply in food and vice versa. And we've understood about whether you can even avoid that step. So getting from the lab to volume, very often we'll sit around, is this something we've seen before? And do we understand how you go at that challenge? We don't communicate publicly all of the areas where we've been involved, but internally fitting in choosing projects, it's not just is it a good project, but are we the right partner for it? And we definitely bias towards things that we believe we understand, where we've got some grasp based on our prior experience of how you scale. The other thing is to recognize that nobody has a monopoly on the answers, but we do a lot of industrial outreach to understand from bigger companies both what their roadmaps are and what their problems are. So, for example, we have a quarterly call with Bosch in the UK, and they tell us what they're looking at, what they're seeing that's interesting, and we share information exchange. Very often, the roadmap is not completely public as to what they're looking at. They don't want to advertise to their competitors what they're interested in, but on the other hand, they need to communicate because they need to source solutions to those problems. And increasingly with open innovation, they know that that won't just be internally generated. So spending time within those clusters, again, we find that the benefit, because we focus on certain areas, it's easier to have a repeat dialogue with people. You can then leverage that to get a better understanding. Or if you see something new, you know who to call to validate whether something is an industry problem or not, or whether it's purely of academic interest, or whether the right interpretation is being put on the problem. I would say if you look at the overall funding market currently, so that's how we're sourcing what we're doing, the funders were, until recently, playing much earlier because we'd seen extremely buoyant funding markets. So to some extent, if I think about the competitive landscape for us, when you get markets overheat, anybody with a checkbook is a venture capitalist, and people rush around saying, oh, we'll be active, we can put money in. That has definitely reversed currently, and I think could even get tougher. So what we are seeing is that you talk to people and they say, well, I'm a specialist investor in ag, for example, as a space, and there are certainly a number of those around, but they have quite high minimum revenue hurdles before something is actually going to fall on their radar. And they're using that revenue as a proxy to validate whether there's market demand for the technology. Now, that makes it, their migration up the food chain, if you like, creates more clear blue water for us, but it also creates more challenges generally for AgTech projects to get off the ground in the first place, because funding is often more distant than it has been historically. So turning then a little bit to the, if you like, the mood music of where are we in 2023, I think we are generally seeing the end of the age of the unicorn. So this is unicorn, is these companies that were seeking to get to $1 billion valuation, even when private, where the mandate was entirely around grow as quickly as possible, whether it was profitable or not. So in the food space, a good example would be something like Beyond Meat, which even got public, reached a $10 billion market capitalization. It's a brand that I'm sure many of you will have heard of in the alternative meat space. But it's since seen a more than 90% fall in its value. And the reason for that is that people have noticed, including the company, by the way, they've commented on this publicly, that it's costing them over $1.80 to make each dollar of product they sell. Now, how did it get to this point? Well, it got to this point because equity funders essentially subsidize the cost of selling their product. But at some point, you hit a roadblock where that's not possible. And I think generally across a whole range of this unicorn space, investors were investing on the basis that somebody else would pay a higher price later. And now they're wanting to invest on the basis of whether you can build a sustainable and profitable business. I think that's healthy for the long term, but it's causing a period of painful relocation for many companies. And it's causing some risk aversion in the appetite of investors as they adjust to this new reality. That's being driven by capital suddenly having a cost. Interest rates have gone up, as I'm sure you will have seen. We've seen inflation coming back in a really violent fashion, which is particularly pertinent to the food and AgTech space, but it's particularly affecting, of course, people on lower incomes who struggle to make their budget stretch. And so there's this increasing pressure, therefore, for businesses to become self-sustaining. I think, therefore, when you talk to investors, what you find is that they are more interested in, if there's a funding round, how much runway does that give you to deliver, as opposed to how quickly you're growing, whether that's profitable or not. There's a definite change. And if you're looking to spin out and commercialize your intellectual property, you therefore need to be communicating about what tangible value markers you can deliver within the window that you're funded and what traction you can generate rather than just aspiration. It's no good saying, well, it would be great, everybody's going to eat veggie burgers or whatever. You've got to show actually what you're going to deliver. And equally, not just in the long term, but people want to know, if I invest today, why at the next funding round will you be worth more? So you've got to have both short and long-term objectives to meet the needs of funders. And I would say that is something that's much more in focus than it was even 12 months ago. And I think that will become even clearer as we move forward. Now, all that having been said, it's definitely not doom and gloom. I think if we think about the big challenges, and Megan touched on this in her introduction, that the world is facing, climate, water, food security, health, all of these are sort of acyclical, if you like. They're just going to be there, whether we choose to pay attention to them or not. They're going to be there and continue to worsen, unfortunately. And to me, at least, it's inconceivable that we will be tackling these without a very strong, innovative technical contribution. We will not solve climate or water availability or food supply, or whatever, without significant technology innovation. And even if you look on, for example, climate, the forecasts for achieving carbon neutrality, around half the contribution comes from energy efficiency, for example, in its various guises, not from new forms of generation or such like. And that's for technologies that the people writing those reports don't even know whether they exist yet. So there's clearly got to be an innovative component. I think that's certainly true as well of the food and agri-tech space. It is important, though, that if you're trying to commercialize your technology, that you learn something about speaking the language of business to create an overlap. It's no good telling just technically what you do. You need to be able to talk, especially in this environment, about capital efficiency, how you're going to scale up, the payback, product market fit, all those things matter. I would say that isn't about making academics into CEOs. It's about enabling academics to work with people as part of a team that can come in and help with that. And that's certainly where we try to fit in to help in that translation and communication task. The AgTech sector in particular, even more than normal, is denominated, I think, by cost. And despite its scale, it does have some issues in getting investors engaged. And just to bring that home, here's some live data. So from the last quarter of pre-seed funding in the US, and it's the size of the bubbles equals the number of companies funded. The left-hand scale is showing the average valuation, and across the bottom, we've got the amount raised. And unfortunately, you will see in the bottom left corner, we have the poor old food sector, which, despite it being one of the most fundamental things to human life, hasn't quite garnered the attention from investors that it needs. So, a very small number of companies being funded with less money at lower valuations. So what I said generally about capital efficiency is even more true for the food sector, unfortunately, than the other spaces. And in particular, software in recent years has come to dominate. Actually lots of those sectors, if you look at fintech, gaming, cybersecurity, SaaS, these are all actually software in different guises. So software has certainly dominated. I would draw attention, though, to logistics in there in the middle, which has suddenly become a category in its own right, and is very definitely relevant to the food and agri-tech space, where there have clearly been issues, and I think will continue to be issues. So I would guess that a number of those in there, where you've got to think about wastage being reduced, and if you get poor logistics, that's an issue. So there's a little bit of hope with some stuff there in the middle, maybe, but you've certainly got a hurdle to overcome to attract funding. And I happen to think, by the way, investors are mistaken about that. The beauty about early food innovation is that the food industry, if it does anything, does it at real scale. So there's no reason why it can't deliver large-scale returns with the right approach. But you've certainly got some investor skepticism to overcome in getting out there. So looking then at some of the key challenges that exist within the sector, the technology readiness level and reproducibility are a big issue for any tech at the start. So only about a quarter of top peer-reviewed research is replicable by industry, and it's very hard to validate without working technology, whether you're in the 25% or in the 75%. So I've included a little graph down there on the right, which just shows papers that turned out not to be reproducible versus papers that were, and whether they were cited or not. And you can see even the peer process isn't really differentiating well between that stuff that turns out to be true and turns out to be not true if you measure truth by reproducibility. And I know it's more complicated than that, but it's definitely an issue. And so we put an awful lot of emphasis, actually, therefore, on getting to working technology that you can show people. And I think especially in the AgTech space, as opposed to, say, life sciences, that's even more important. AgTech companies are typically only interested when they see really strong data that is relevant to them. It's not enough to say, I've got good data. You've got to show that they can understand it in the context of their industrial issue. When you then look at scalability, so classically, the academic endpoint is getting a paper published. And the peer reviewers may not even have seen the thing that is the subject of the paper, of course. Whereas industry wants lots. Even if you've done work to generate that data, you may have done it in a batch process or made one of something. So convincing people that you can make lots of it is important. And in the food and agri-tech space, that's even more as well, against the context of it's not just enough to be sure you can make lots of it, but you've got to make it lots at the right price. So whenever you talk to food companies, first, second, and third things they talk about are cost and cost reduction. That's absolutely their focus, because actually, when you think about it, it's not just about profit for them. Many of them don't make huge margins, but it's about people having limited budgets. And if you want to serve the whole population group, you've got to have competitive pricing. On the quality side, meanwhile, customers are very sensitive to that. And things like flavor profile, consistency, shelf life, you need to set yourself the challenge that you're going to meet at least the quality that's there. And in some tech areas, you can get away with showing you're on the right track early on, and people will back it because it's going to, at some point, intersect. In food, it just doesn't work that way. People either like food or they don't. So you've really got to achieve that end market credibility with your initial product, which is certainly a demand that is different than in some areas of the space where you can just solve a piece of a problem. I touched on earlier, in-application use is super important for food and agri-tech companies. Many of them are really experts in formulation or cooking or such like. They don't understand the deep science behind this. I mean, I had an example years ago where we had an encapsulation technology for delivering a flavor that was used in the industry, and we sent the concentrate to the food company, and they came back and said, it's the wrong volume. And we had to bulk it out so they could put in the same number of buckets of the product that they used to put in for the thing we were replacing. And that was less efficient and more cost, but that was just what they understood. That's what they wanted to do. So you've got to be very clear about generating data that is relevant to them in application, not just saying I've got a good ingredient, but here's the ingredient in your end food, and it makes something that is cost and taste comparable to what you're already selling or better. The route to market also is really important. The food market and the agri-tech market are high volume. So you need to think about, how am I going to address that? Also, very often you will start out with what you do, but the end product the consumer buys is something different. So you might have an ingredient, but the customer isn't buying the ingredient, they're buying a formulated end food, or even in things like industrial robots. Well, you might make the robot, but the customer, the farmer, wants to see service, delivery, availability, a financing package, a load of things that startups are not set to do. So you have to think about, what's the core thing that I'm really good at? And does the rest of that makes the whole product exist elsewhere? Where do I fit? And can I go and make my innovation available within the context of that pre-existing supply chain? There's definitely a challenge around what we call the iceberg problem, which is, you may not know what else is out there. If you do know what else is out there, usually the easiest thing to find out about is what other startups are doing, but you don't know what else big industry is doing. I remember discussing some years ago with Cargill what was going on around drones and AI around crop predictions and such like. And they were saying, we see all these startups, but we have a lot of this already internally. And that was invisible to investors and even to academic teams as to what they're doing. So you really need to go and engage to find out whether what you're doing is genuinely market leading in application. Because you just have this problem that if I'm a big company, I get approached by every startup, right? That's got a new technology solution to pitch. I've got much better market intelligence and I know what I'm doing internally. If I'm the startup, it's a lot harder to find out about what else is out there. You really need to invest in effort to try and solve that problem. Then you've got the needle in the haystack problem when it comes to investors. So a classic VC fund will do 1 to 4% of the deals that it sees. So that means it's rejecting 95% plus of the propositions that come across their desks. And you've got to really be able to grab the attention early, and their attention span is very short, with the compelling proposition of what you're doing. So answering these questions that are above concisely is super important. talk to anybody in the tech space and they'll tell you that this is all, even if you think it's about tech, it's really about people. So if you're the academic founders, how do you bring in people around you that can meet these challenges that you are not familiar with? Apologies, that's my oh, the joys of energy efficiency, right? So it's really important that you get other people around you that have had experience of solving the challenges that you yourself haven't. You know, you've got a good innovation, but how do you turn that into a good business? Well, don't feel you've got to solve everything yourself. It's really important to reach out and bring in others. So if we then look at how Frontier fits, you know, that's our definition, if you like, of the problem space, but how do we fit into helping academics with that? So the first thing is, it is about this people resource. So lots of people will tell you they actively support projects. VCs, for example, will say that we're very active. And then you say, well, what do you mean by that? And it'll turn out they'll put someone on the board who will help with networking, but they're limited in their resource. So it's important to ask, you know, how much time do you have to put in? And then do you have the relevant skills? So for example, in our business, you know, our senior food and agritech advisor was the ops director for Mars in Europe. My director of commercialization was the head of innovation at AB Sugar, part of AB Foods, a FTSE 100 company. We focus on getting people that have really done the things that you may not know how to do as the academic, but that need doing for the project to be successful. So that's our take on it. But whoever you deal with, make sure that you clarify that they really have the project understanding and have done it at an appropriate level. And one of the challenges we also see is that there are lots of people who are trying to be helpful, you know, tech transfer offices and other organizations around the space, but they don't have, they're generalists or such like, so they don't really have the quality of people or experienced people to do what's a really hard thing. You know, nobody wants to buy off a startup, and it's a really high hurdle to be successful in this space. So you need to make sure that you reach out and be, you know, if you're a leading academic, make sure that you put other leading people around you in the roles that you want them to fill. Otherwise, it's not reasonable to expect that you will be successful in what is a, if you think about it in a diving analogy, what we're attempting is a very high tariff dive here. It's difficult, right? So if you don't have the right skills around you, you are unlikely to be successful. Getting things right at the outset to us is really important as well. I mentioned that we may work with a startup for you know, a year, for example, before it incorporates. And the job there is to translate the academic to the investable and to the deployable from an industrial point of view. What we do try and do, which I think is gets less attention, but is equally important, is to try and get to an early no with academics if something isn't viable and explain why. And then they can either spend the time on something else or solve that problem. But it's really important to try and, you know, I've often found in interacting with institutions and academics that giving a really clear no, where, well, you think this, but we've gone and spoken to an industrial partner and they say, here's the issue, is very helpful. And it stops them wasting, you know, perhaps even years of their career or embarking on a path that ultimately isn't going to be successful for a reason that was knowable at the outset. So we do put a big premium on getting to an early no if something isn't going to work. And our model is that we look for founding equity in these ventures. So there's no point backing something and being engaged in something and putting time and resources into something that isn't going to ultimately be successful, because we only make money if the project ends up getting to market. Broadly, we aim to do all the things the academic couldn't, shouldn't, or doesn't want to do. And I think it's very important for academics to be honest with themselves about what their interests are and what their interests are not. So we're kind of there to try and fill that gap until we can bring in really good commercial management. So a couple of examples from our portfolio. You know, we have a company called the Vaccine Group, which is involved in animal vaccines. It's been funded by the UK, US, and Chinese governments. It's, you know, doing very well, but we have a strong academic lead. We only relatively recently brought in the CEO once we demonstrated the data and traction and engagement. As a result of which, we were able to get a guy who'd been the CTO of the Global Alliance for Veterinary Medicine, and before that had worked for the largest animal healthcare company in the world. In proteins company we've got that's making proteins for the food industry, we've recently brought in the CEO, and he was the MD for ingredients for Kerry, major food company. Well, these people wouldn't have joined at the start because the best people look for some evidence of traction for the projects that they join. So you've got to work out how you generate that traction. And the classic VC approach is that VCs say, well, we back management and they want to see completed management teams. And back to that 95% point, if that isn't there, they just drop the project and move on to one where they do find the right management team. But when you then say to them, what's the most common cause of failure, management is the thing that's top of their list anyway. And we think, especially in the university space, the reason for that is it's really hard to get good commercial people early. So our business model is around bridging that gap to reduce the risk of getting the wrong person in or the not enough experienced enough person in to drive the project alongside the academics.
Neil, I'd love to jump in here, and just on that note of you saying bridging the gap, I think that's exactly what we want to do with our discussion. So I think in the interest of time with these conversations, to hopefully get some input from Nekesah and our audience, I'd love to jump into the discussion, and hopefully we can touch on your remaining points during that.
Yeah, sure.
Awesome. So thank you for that fascinating look into the IP commercialization of frontier IP. There's so many more parallels to draw. Clearly, we could go on for a long time of all of this topic, but I think there's a lot of learnings to be had about how the strong partnership and spin-out work of frontier IP and the ambitions of CGIAR to deliver impact from their science align. So a reminder to our live attendees, please remember that this discussion is yours as well. So we encourage you to take advantage of the Q&A function, pose any questions, any comments, topics you'd like our speakers to explore further. Make sure you take advantage of that. And so now I'd like to introduce, joining us in this conversation from the Alliance and CGIAR is Nekesah Wafullah. Nekesah is on board the Accelerate for Impact platform team as venture builder expert. And she has a rich background in innovation project lifecycle, from ideation to implementation and commercialization of agricultural products and services. So welcome, Nekesah, and thank you for being part of this discussion. I love if you kick this off with first sharing some of your initial reflections from what Neil began to present about the work of frontier IP and how you see this aligning as goals to relevant to AgTech Transfer at CGIAR.
Thank you so much, Megan, and also Neil for the presentation. I think for Neil's presentation, it was right on point, especially on highlighting the challenges that we actually face in research and bringing out innovations. And some of the key things I picked is about scalability and what we do, at the research level, trying to bring these technologies to commercialization. At times, we are driven by funding, not really looking at how the product will actually help in terms of, solving a problem out there. And I like that he brought in the aspect of, understanding the market first, the issue about the iceberg out there, what is out there? How do we know what is in the market so that we can actually translate this into research and innovations that can actually go out into scalability and into the market? And just looking at some of the issues that he raised about pre-seed funding, I think I would like to throw in a first question to you, and that also came out in the chat box, where there's that disconnect between the biotechs. You mentioned about biotechs getting better fundraising opportunities rather than the agri-food and the food sector. Why is that so? And what can you advise from your experience?
Yeah, so I think one of the things is that investors look for 10x returns. Can they make 10 times their money? And they're skewed and motivated. I mean, they don't always get this right, but for example, people can imagine if I've got the next cure for cancer, particularly in the biotech space, there's going to be a big market for it. And they're used to seeing a very high margin end product. So if you think about the margins on pharmaceuticals, they're extremely high. But that is offset by, it takes a long time to get there and it costs a lot of money, but they're focused on this sort of prize of high margin, lots of M&A in the sector, because big pharma companies already have distribution. If they see something they like, they'll pay a lot of money for it. By contrast, the general perception of food and agritech is it's a lower margin business. And it's hard, it's expensive if you're going to build brands. So you've got to think about, how do I address that communications challenge with my venture? Now, I don't necessarily think investors are right, but you've got to be clear. Unfortunately, they're the ones signing the checks. So you've got to think about how you play into that domain. I think, by the way, we may also see that these things do vary a bit over time. And I think we're just at a particularly challenging point in the cycle around where valuations sit. So, you know, I don't think it's always that bad, but at the end of the day, if you're trying to commercialize your technology today, it's no good saying, well, it would have been better doing it 5 years ago. You know, you've got to live with the environment you find yourselves in. But I think that's it. It's about the margin. And so sometimes understand if your technology, for example, let's say you're in the ingredient space. Well, ingredients actually are not a bad margin business. They're better than the end food products that they sell into. So communicate where that is. Communicate also around the efficiency of capital. How am I going to scale my business? Do I need to build a factory? So one of the problems in Beyond Meat that I mentioned was that they're building their own factories. So investors then worry about operational risk. You're going to build a plant. Even if you can sell it at a good price, if the plant isn't fully utilized, you will still lose money. So they worry about this need to build large-scale operational assets. And if you've been out the food industry, you've got to build lots of factories. If you're going to sell a pharmaceutical, you need quite a small facility because you're selling tablets. If you're selling food, there's a big scale-up problem. And this is why we try to focus on things. Can I have technology that I can enable people who already have factories to use, rather than build factories from scratch?
And just building on that, on the issue of the collaboration, because if we are looking at CGIAR, then we are talking of partners that would actually, you know, be engaging with us at a level whereby we are working together and working together. How does the Frontier IP build relationships with the necessary partners and stakeholders? Because you mentioned that you can also, you know, you can work with the researcher right from the beginning, maybe a year before they even incorporate, you know, their company, or even, you know, commercialize the technology. How does Frontier IP come in here?
Yeah, so the first thing is scoping the problem, and that's just about having connections where you can reach to get to the food companies. So, for example, because we're quoted and we have institutional fund managers at our quotes, we can get to pretty much any quoted UK company fairly straight away. I just have to pick up a phone to someone I know and say, could you introduce me to the CEO? And it's hard as an academic to do that. You know, you probably speak to another leading academic, but it's hard to do it industrially. So that's the first point. In some cases, we have regular meetings with big food companies, and they will privately tell you more about what they're interested in, and they publish as their areas of interest because they don't want to educate their competitors. So that's another piece. And then once you are engaged, it can be helping to get over that hurdle of generating the right data. So to give you an example, I mentioned we've got a robotics company in a portfolio that picks crops. So we took a raspberry grower that we'd found to see them. And I said, that's very interesting, right? We need more data though, and here's the endpoint that we need. And the academic said, oh, no problem, we can do that in 2 years. And the food company looked a bit confused and said, well, 2 months, that will do. So we actually put together a team to do that in the 2 months internally within Frontier, which was around how you visualize the, you know, the raspberry or whatever, the image recognition, which wasn't the focus of the team. This team was really skilled in soft robotics. The vision problem was they hadn't dealt with it because it was slightly parallel to what they were doing. So getting engaged and say, well, here's the point. How do we bring them together to solve that problem? So it's really throughout the spectrum, but at the start, when you're originating, it's getting that outreach to industry and getting an understanding of what the problem is. And very often what you find is the academics try to do the fastest, for example, of something, and industry says, I want the most efficient or the lowest cost. And those are related problems, but it's, you know, the academic to get his paper published needs to show the fastest. Industry to make money needs to show the most efficient. So they're connected, but you've got to rephrase the problem to understand what data can be done. The other thing, final thing I would say on that is it's really important to engage early, because very often then the research can be enriched without any extra cost. I mean, for example, some years ago, I looked at an antimicrobial technology, and the academics had picked the most challenging organisms. Then he spoke to industry, and 2 things came out. One was in the health service, they'd missed one of the bacteria that was actually a major economic cost. And in the food industry, the thickness of the media that the bacteria were growing was thicker than the data they were generating when they were measuring in their trials. Well, neither of those things cost extra money to include in the original research. But if you don't do that, you get to the end of the program, and then you go and see them and say, well, it's interesting, but you need to go away and generate this new data. Otherwise, I can't tell if it works for me. And so that's just about outreach. And, we think we're good at it, but even as an academic, you can be doing more of that. The more of that you do yourself, the better it will be. And as publication becomes more, and grants actually also become more focused on impact, I think that's become more important than it was. Years ago, you didn't have to talk about impact. Now they want to know what your deployment plan is. So if you're an academic applying for a grant, you better make sure that you've done some industrial outreach so you can actually answer that section well.
Yeah, I think that's a great answer. I'd love to call in a question here from the Zoom function. In that same vein of academics needing to better understand industry and taking that initiative to understand what's needed to bring a product to scale, I have a question about the critical commercial validation actions, be it establishing product market fit, business model options, those things that need to occur between taking a technology from university to funding. Typically, how long does this take, and what do academics need to equip them to be able to scale it during that time?
Yeah, so being a marathon runner is helpful. I mean, the commercial cycle is, people talk about 7 years, but I think it's more realistic to think about 10 plus, to be honest. It's a long, you can do it quicker. But, I mean, for example, we had a company that Goldman's floated for us on NASDAQ in 2021. Well, we were founding shelves that in 2012, and that's done fantastically well. It's raised £500 million or whatever. But it took a decade, even then, even with a really highly competent team. So plan for it to take a long time. The single most important thing, though, I would say, is actually getting beyond, for the academic startup, is getting to something where you can actually show the technology working. We did an event before Christmas for all our startups, and we had them talking to 100-odd investors we brought together. But I only allowed companies to present who also demonstrated working technology. And the reason for that is that this reproducibility problem and the ability to dialogue on an equal footing with industry. It's no good just sending the paper, you need to show it working. So if you can do that early, you can accelerate early. The only exception to the timescale piece is that actually there is some data that if you have an interesting feature or add-on technology for big corporates, there's kind of a window at the start when you show your technology is adding value. Then as a startup, you destroy value when you build sales from the point of a big company, because you add on cost and increase your burn rate as you try and add sales to get your early sales. And then at some point later, it becomes profitable, and therefore a big corporate can acquire you and it's buying you on its earnings stream. So actually there's a sort of peak. There's two peaks. One early on, selling the technology before you commercialize it fully. Then you destroy value while you commercialize. And then at the back end of the process, you become independently valuable as opposed to valuable as an add-on technology. So there are some exceptions, which usually you'll see more focus on licensing, so that they don't really show up as strongly as you might expect in the startup figures. But that's something else to think about, is, do I license or do I spin out? Well, that feeds into that whole product thing. If there's someone who could adopt it early and you can do a decent licensing deal, sometimes that's a better route.
Thank you for that. There's something you mentioned about working in similar interests groups, so that you have the similar clusters. But even with the clusters, you dive deeper to even look at what is similar even within those clusters that you have knowledge about. Looking at that and looking at the CG and how it operates, different scientists, different researchers, different innovations. How would you advise us in terms of just that path that Frontier IP has taken into bringing those technologies that we have into commercialization?
Yeah. So the first thing to say is that in the academic domain, the richest IP comes in the overlap between two different areas. When the Venn diagram sort of overlaps, you've got somebody good in one area and another, and they come together, rather than for the end solution, the technology itself, rather than in the end area. That having been said, I think there are common challenges around how, as I mentioned, you take a batch process forward and whatever. So if you're able to foster the success stories internally and the scale-up challenges, and even the knowledge of, for example, we're just looking at something in the solids, in the surface space, in ceramic space. I've got a new technology come along, and the first thing we've done is introduce one that's further on, that's deploying at scale, to test some equipment and say, here's the equipment you might buy. And that, they were going to buy the wrong equipment, essentially. And by running some tests, we've shown that you can avoid that step, which avoids a hurdle. So I think the more you can do, as you're doing with events like this, to foster interaction, maybe create interest groups internally around common challenges, work out how you share industrial connections. Because the advantage you have is with the scope of what you're doing, you should be appealing, if you find a right way to route it, to some of the big food companies about having, lots of innovation that's available within the network. Your challenge is how to make that efficient, because even in a big company, there might be 4 or 5 people in business development. And so your problem is to make sure that you can be efficient in matching their needs with your capabilities. I don't have an immediate answer for you on that, but I've seen that repeatedly, that this is where often the university tech transfer offices struggle, actually, because you've got generalists in the tech transfer office, and if you divide through the number of PIs by the number of people in tech transfer, it turns out on average, they can meet each PI once a year. Well, they can't really stay on top of what they're doing. So creating mechanisms or platforms where you can improve that communication so that you can express it externally to corporates that are interested, I think would be, I don't know enough about exactly how you're structured, but that would be my first guess if you forced me to volunteer an answer.
Thank you for that. I think it helps us in terms of, internally even structuring ourselves and seeing what processes to take. There's a follow-up question by Felipe in terms of the funding and investment. Further on the comment in the chat, there's a slide that showed investment in agriculture is in contrast to other sectors, and it is quite low. So the question is, why do we think it is so relative? It is low relative to other sectors. So this one, I think it's dealing more on agriculture as compared to other sectors. And I've heard you mention a lot about health, health sector, and it seems like they're having more funding. Why is that so? Yeah.
So I think the common things are that investors worry about scale. So the great thing about the food industry is that it's big. The problem is you need a lot of manufacturing assets, therefore, to address the scale. So people worry about that forward funding risk. They have a perception that it's a low margin business. There is a bit of a perception as well that in some areas that if you're addressing not just developed world, so actually why is health popular? Because they get to treat lots of well-off Westerners. Unfortunately, in some cases, there's reticence to be as keen to support sectors that are addressing the developing world, and that's harsh, but that's the honest answer to the question. So it's sort of, if you think about healthcare, you get to spend a lot of money treating the worried well or such like, and it's high value. If you think about food, even in the developed economy, most of the customers are going to be in the lower socioeconomic brackets, and then there's a whole market beyond that where frankly they'd be very happy with the average income of people at the bottom end of the scale in the developed world. So I think it's a challenge that it plays into that low margin space. Now, on the other hand, it's clearly a social imperative, and I think if you're a good operator, these are clearly big markets. So the way to square that away is to try and find ways to get more operational gearing into your business, which is to work with the players that are already established at large scale, rather than try to do everything yourself.
Yeah, I think that's a really good point. But I think, even as we're coming to the close of this discussion, there's so many more topics to be explored. But Nekesah, if you had any, final thoughts or final questions that you'd like to tie a bow on this for now.
So maybe a final question and final thoughts. There's a question that has just come in. Transferring of the IP from university to the spin-off can be quite expensive, but especially if you're looking at newly created spin-offs. The access to fees, royalties, IP, registration. How would you advise this? And maybe as you take this, I would give in my final comments, just to say that this was really, educative and really a lot of information. I'm sure if we had more time, we'd be able to learn more about Frontier IP, and especially on the what Frontier IP does. And what I have taken, and I know most of us have, is, lines of interest, get market information, try as much as possible to create technologies that are, can be scalable and are market driven. So thank you so much, and maybe back to you, Neil. Thank you.
Yeah, sure. So I'll try and be concise on the answer to that question. I will also share with you, Megan, the slides that we didn't get through, because some of that is touched on actually in the deck. So you can make that available to members if you, or the audience if you wish. I think this is where universities often have what we call a train set mentality, which is that they worry about non-utilization of the IP. So they try and sort of lend it out on a license. And we're very keen on actually alignment. It's super important what they can do to enable the process, recognizing that it's a challenge for the startup. The startup will do its best. So mitigating the cost. For example, we did one spin out with Plymouth, and we used a mechanism where the university got its patent costs back, but on a quarter of the balance in arrears. So the university helped the working capital to recover against the cost of the IP ownership, because the university is a big business, 100 million turnover, the startup isn't. Equally, having royalties deals that don't have minimum royalties in there, because any money the university takes out could instead be used to develop the technology, which ultimately is in the university's interest as well as the startups. So it is tricky. There are some tricks as well, some detailed things like, for example, if you're making a patent application, you can sneak 2 applications into one and wait for the patent office to notice, so that they only split the divisionals later. You only have 1 invention in each patent, but there are some tricks you can get up to about efficient management. But the primary focus, I would say, is for the university to align itself, ideally by taking equity rather than royalties, and ideally by not trying to immediately recover the patent costs that it's incurred. So the gift is in the hands of the institution rather than in the hands of the academic. But that's the direction of travel that I think we need to see.
Thank you so much, Neil, for that, final thought. And I think that's a really good point to take away from this discussion, is that, the ball's in our court as much as it is in industries. We both have to be really proactive in better understanding each other and opening, these channels of communication to make for stronger scaling partnerships. So I'd like to once again thank our speakers, Neil Crabb and Nekesah Wafullah, for driving forward these important topics. Strong technology transfer services, both within institutions like CGIAR and in partnership with the work of firms like Frontier IP, will be essential in ensuring research advances can break out of academic papers and scale to the market. So on behalf of the Accelerate for Impact platform, thank you to everyone who joined us live, and connect with us at innovations@cgiar.org to carry on the conversation. We will be making available resources from this event, including the slides and recording, so be sure to share those with your network and anyone interested in innovating with us. So stay tuned for the next Venture Out event around the corner for more lessons from the innovation ecosystem of supporting science to deliver value. So thanks, and see you all next time.
Thank you.